Hi, this is Mani from bse2nse.com. In this video, I'm going to talk about option selling for intraday alone, and which can be done on Wednesdays and Thursdays on Bank Nifty weekly expiry, and for Nifty monthly expiry again can be done on Wednesdays and Thursdays. And Thursdays are obviously better because it's the last day, and all the out of the money contracts will become zero, and so these are the days where you can play defense much better as an option seller. So let me get into the video here. So these are kind of candle patterns for the first 15 minutes that you want to observe when the market opens between 9:15 to 9:30. So currently we have a pre-open market, and as soon as the market opens at 9:15, so there are going to be a lot of panic orders coming in and going out, and between the buyers and the sellers. So sometimes there'll be a day when everybody is aligned in a particular direction, and you'll have a clear uptrend or a clear downtrend like this, like 3 green candles one above the other, 3 red candles one below the other, or lower low and lower high. In case of uptrend, higher low and higher high. Okay, so these are days when there's a clear uptrend or a downtrend, and there's a good chance that Nifty or Bank Nifty will move big on that day, so which is not ideal for option seller. So these are days when you should avoid doing intraday option selling, both the sides, call and put. So but this is very rare. Like out of 10 days you will hardly have 1 or 2 days happening like this. So the first 15 minutes observation is very crucial till 9:30, so you will not enter any trade till 9:30. So moving on to the next slide. So these are patterns of consolidation markets in the first 15 minutes, wherein the buyer and the seller don't have a clear direction between them, and they're both pulling each other apart in different directions, and you have patterns like these. So in the earlier pattern, if you see, there'll be long bodies and less sticks on the candle, and one above the other or one below the other. Here it's pretty mixed up between the green and red candles, and mostly doji kind of candles, or more stick and less of body on the candle, right? So these are consolidation days wherein the buyer and seller are into a tug of war, and no clear direction. So I've just made this point in a paper and scanned it here. Okay, so trending markets avoid, especially if it's on Wednesday, because Wednesday you'll not be able to play much of a defense. Consolidation markets, the patterns that I showed in the second sheet is good to trade, and you can enter trade by 9:35 a.m. and you will enter both call option and put option, both the side. You will short both of them to avoid an unlimited loss, because when you do a option selling, and when you're going to increase the number of lots, and I want you to practice probably with just one lot for a long time till you get confident and comfortable with this strategy. So once you increase the quantity that you're doing, eventually you want to get into a stop loss, because you don't want a big major event, unforeseen event, something like a finance minister coming and announcing something, and the market's crashing or going up. So you want to have a stop loss at 6 times at both the call option as well as put option. So let's say you're shorting at 10 rupees, both the call and put, you will have the stop loss at say 60. So that even if you book a loss, it will be like profits made in 2 other trades on a good day in these kind of trades. And this trade can be done only if you can watch the markets through the day, because you'll need to play defense, you'll need to react to playing defense. So preferably not necessarily a stressful kind of a watching, but you should have an eye on the markets and the patterns that's developing through the rest of the day. Next slide. Yeah, so basically the 9:15 to 9:30 range here may eventually break on either the lower side or the upper side, whether it is a consolidating pattern or a trending pattern. If it's a trending pattern, then most likely it will break pretty quickly between 9:30 to 9:45 or 9:45 to 10 a.m. So if it breaks between 9:30 to 9:45, it's a stronger trend or a directional trend. 9:45 to 10, it's a weaker trend, wherein eventually profit booking will push the prices back into the consolidation zone or the 9:15 to 9:30 zone. And if it doesn't break by 10 a.m., then mostly 10 a.m. to 12 a.m. there will be no break, and so the trade that you enter at 9:35 in terms of option selling will be at a profitable zone by 12 a.m. comfortably, right? So I'll just quickly skip to the next slide. And if the video is still confusing, I want you guys to practice this with one lot and you'll understand, how this works. So this is the next slide. So on Wednesdays, so I'll start with Thursday, okay, because Thursday is the best day to do. So Bank Nifty probably you'll do 300 to 400 points away start of the day, and Nifty, if it's Nifty on the Thursday expiry day, 100 points away on the upside and the downside. And also depends on the day. If the VX is really high, you can choose this a little bit farther away, and this is based on experience, and you will have to tinker around. So this is not a hard-coded thing that I want you to always follow strictly. So based on the day, based on the volatility that the markets have had in the last few days, you will need to adjust this, but typically this is something you tend to do. And on Wednesdays you can double this. Nifty 200 points away or 300 points away, Bank Nifty 500 to 600 points away, right? So I'm just giving you the raw facts, so you can just practice with one lot and see how it goes. So this is basically the play, and on Thursdays obviously you will be able to realign. Let's say one particular side is making good profits and the other particular side is making a little bit of loss. You can shift and realign and try and capture more points, and the idea behind these trades will be to capture somewhere between 0.5% to 1% on every Thursday. 1% is a really good, so you will have 4 Thursdays in a month, so you can make up to 4% a month. And if you watch my other video, 5% a month is the path to becoming the richest person in the world. So anywhere between anything more than 1.5% a month itself is good. So this strategy has a good potential, and more so I rely on the first 15-minute or these kind of the 3-5-minute candle pattern. So if it's a consolidation pattern, then it will be a very ideal day for an option seller. So try this out and let me know how it works. Push in your comments into our YouTube video. Subscribe to our channel. Stay in touch. For a free training, check out bse2nse.com.